And welcome to this week's Great Quarter Guys. My name's Kevin Hill. I have Andrew Cox over here in his normal seat, just back from the Bahamas, a nice little cruise. It's lucky that he did actually get back. You didn't get quarantined.
No quarantine.
In the Caribbean for like 3 weeks. That's not the worst place to be quarantined.
It wouldn't be, no. They did take off some passengers that had been to China in the last 2 weeks, so there was a bit of an impact from the coronavirus, but nothing major.
Wow.
You look healthy. You're glowing.
Thank you. It wasn't very sunny down there. I got a lot of sun through the clouds. Yeah, we only had like one sunny day. Everything else was pretty cloudy.
Well,
but
you're probably in the bar then.
It was warm.
Anyway.
I was, yeah. But they got bars outside too, so it's
true. And our special guest here, JP Hampstead. My P's sound like B's, they tell me. So JP Hampstead.
Thanks for having me.
Yeah, great.
Back again. What's up?
I know, right? So another great episode of Great Quarter Guys. We are going to talk about one of the hottest stocks right now, which is Tesla.
Oh, yeah, I think
Tesla is probably the hottest stock.
Crazy.
Yeah. It's up how much over the last week? I mean, it's doubled. It was doubled this year.
120% year to date. So
year to date, 3 weeks?
Yeah, 4 weeks.
Or 4 weeks? So we're from February now, aren't we?
Yeah, February 4th.
I still think
today.
we're in middle of January.
Yeah, time moves fast.
It does, doesn't it?
Yeah, I mean, today alone, it's gone up like 16% or something. It was up 20% yesterday.
I mean, that's just crazy.
Yeah.
It is crazy. So we are going to cover Tesla, and then we're going to go into a couple other things. We're going to talk about, of course, the forecast of 2020 and kind of what FreightWaves thinks is going to happen in the trucking market. A little bit of DHL supply chain pricing power index mixed in there, and then we're going to do our long and shorts. But first, we're going to tackle Tesla, and as always, our friends over at Carrier Direct, Peter and Ryan and Diane, supplied a lot of the research, the stock research that we're going to go into very, very quickly. And so special thanks again to Carrier Direct.
Yeah, I think this is going to be fun. I think we got two bears in the room and one bull.
Well, I don't know what JP is, actually.
I think JP's a bear. Yeah, okay, let's just run down some big ones. Their market cap has exploded up to $160 billion now. The most valuable car company in the world. Yeah, that's as of like a couple minutes ago.
Okay.
Now the most valuable car company in the world, like 4 times more valuable than Ford in the U.S. They had 2019 revenues about $25 billion. I think revenues in the fourth quarter were 7.5 or something. So up, the fourth quarter revenues were the highest of any quarter this year. Again, the stock's up 120% year to date. We can dive into the revenues a little bit. Their total revenues were up 15% year over year, and their costs were down. So they came out cash flow positive for the last 3 quarters. They actually had net income this last quarter, and a lot of their reasons for the revenues being up less than the everything else. But I think they had a higher mix of Model 3s, so they sold more cars. They had 400,000 deliveries this year.
So correct me if I'm wrong. This is a car company that's valued at 6 times revenue.
I don't think it's a car company. No, I think
do they not make cars?
They make cars. They do a lot of other things. I think they.
Have you ever seen a Tesla driving down the road?
Yes.
They make cars.
Is Apple a watch company?
Well,
they sell more watches than anyone else.
Anyone else, or
anyone else in any watch company in the world? Apple sells more.
Do they really?
Yeah, they took over Rolex like 2 years ago.
Wow, I didn't even think the Apple Watch had been out for 2 years.
Yeah, they sell more watches than anyone else. I think they're well on their way to selling more pods or whatever, earpods than anyone else as well.
But what is Apple? I don't even know if they're not a watch company. What are they? I mean, they're a technology company.
Tech company.
Yeah, they're a tech company.
That sells hardware.
They make computers. Well, I mean, they're differentiated because they're the only computer manufacturer that also designs the operating system and builds a lot of the the software as well as the hardware.
I think Google does it as well now. They took over. They bought HTC. They're now building their own phones. They got the Pixel.
What is Google?
Google's a tech company.
Yeah. Are they an advertising company?
They're an advertising company.
Are they a search company? I don't know. That's a really good question, actually. Because what is anybody?
Yeah, that's just
so. What is Tesla?
I think we waste too much time trying to box them into these predetermined industries that we have. For the only reason is to so we can compare them to other people. But there's no one really that we can comp Tesla to directly. There's a lot of other people that we can try to comp them to. We can try to comp them to Toyota or Honda or Ford or other car companies. I think Honda's the only one that makes sense there because they're the only ones that make a lot of other things besides cars. They make solar. They got into solar panels. They make engines for leaf blowers and lawnmowers.
What do you think?
Motorcycles.
What do you think Tesla's solar panel business should be valued at?
Oh, I don't know. I don't know any other solar panel business.
Well, the investors say 0.
Yeah.
But,
So
I mean, that's
here's my
what
thing. Here's my thing. Like, I don't want to get into like a
Okay.
pedantic debate about whether they're a tech company or a car company because that doesn't really matter. But my point here would be that the reason why tech companies enjoy rich multiples is because they have high quality recurring revenue, and they have gross margins that get better and better the more they sell. So if I write a program like Microsoft Office, and every copy, I incur millions of dollars paying people to, make the source code, right? But then every subsequent copy of the software that I sell has better and better gross margins. More and more of that is profit. That isn't the case with car companies, which is why I think that, and it's not and regardless of whether you think Tesla's a car company or not, where they get their revenue is by selling giant pieces of metal. Cars.
Well, software companies have gigantic economies of scale, right? Because you have that initial investment, and then you just have basically maintenance of, let's say, the code or rolling out new features. So you get that huge incremental margin, right? And as you said, building cars is a very capital intensive business.
So it comes down
it's harder
to
to get to those economies of scale.
So economies of scale, the kind of revenue, whether it's one time or recurring, and the way that the gross margins behave as the company reaches scale and as more of the product is sold. Yeah. That's those characteristics of the revenue are why tech companies are valued so highly. And that's kind of like, obviously Tesla makes very high tech cars, but fundamentally every Model 3 that they make costs about as much as the previous Model 3 that they made. So that's kind of like
you get
why
to a limit
I think that it should be treated differently. If they do get recurring revenue off of software, if they are able to build cars and then have robo-taxis or something like that, obviously that revenue should be valued differently. But like in the current, like if you look at their financial statements, like I don't see why, to me, the company is valued so highly.
But Andrew's just back from the Caribbean. He's writing notes. He really wants to say something, and I cut him off just now. I'll probably cut you off again, but I want to hear what you think.
Yeah.
No, it was my rebuttal was, so right now we've determined two things that make a company a tech company. One is economies of scale. You can build off of every product that you make that has a better margin than the previous one,
Right.
and recurring revenue. Those are only two prerequisites for a tech company.
Well, I wouldn't say the only two prerequisites. It's what makes the valuation of a tech company that much more than than Ford or GM, right? I mean, that's one of the key ingredients.
Yeah, right.
And again, I would say that if another factor, I guess, would kind of be that like modern tech companies, especially the highly valued ones, try to do something that previous companies haven't done before, whether it's Google, whether it's Facebook, whatever, connecting people in a different way, searching the internet, leveraging the data for all different kinds of businesses in a different way. You're not going to see a company, for example, go public and say, hey, we are going to build, to use my previous example, we're building the next word processing program. Like we're launching, instead of Microsoft Office, FreightWaves Office, and that's going to be like.
Well, I'll let Andrew rebut
Is your point that Tesla is doing that, or they're doing something that people have done previously?
Well, it's like basically like it's a product that already exists, that's already in a highly competitive. It's a car.
I mean, it's a different kind of car though. So I'll take Andrew's side on this one because it's a different kind of car. It's a different philosophy. It's a different manufacturing process, and that's the dream. And I like Teslas. I think they're gorgeous cars. I'd like to have one. But my thing is that's the dream. That's the vision. Now the valuation right now, especially, is to that vision, but can they execute that?
Yeah, I'm not arguing that the valuation isn't super rich right now. I'm not. That's
Well,
it's gone up. I mean, the thing's
and-
doubled in the last.
And who was this?
3
John
weeks.
Barron that came out, a famous money manager, Permabull, who came on CNBC actually this morning, and that's one of the reasons why the stock's up 15%, and said that in 10 years he thinks it's $1 trillion a year revenue company,
Right.
which is so outlandish that.
But why is that outlandish? What do you think that?
What's the,
So that
$25 billion this year. So in 10 years, I mean, I'm not that good at math.
Yeah, but I think his argument wasn't that they're going to
I mean,
take
that's like thousands exponential growth.
right. But I don't think his argument is that all of that revenue growth is going to come from car sales. I think
understand
I
that,
think
but-
eventually they get to a point where they look at Apple now. So Apple, when the iPhone came out, it grew exponentially. It became 60, 70, 80% of their revenue, and then they started divesting away from that and getting into services. They started building attachments to things, and now Apple revenue less than 50% actually comes from iPhones. I think Tesla's going to do the same thing, and they've already started building recurring revenue models that
they
will
have the
take over
vision.
the service.
They have the vision of the same thing, right? You just have to execute it, right? And Steve Jobs, for all his up and down kind of unique personality, didn't get in so much trouble with the SEC, didn't get in so much trouble with investors, didn't get in, does
I
Elon
think
Musk
Tesla
have
investors
the...
are pretty happy right now.
Well, they're happy right now. They weren't happy 6 months or 9 months ago, 12 months ago. But it's short term. 10 years away, $1 trillion in revenue is a little bit outlandish.
Well,
That's an outlandish call.
Yeah,
To say,
$1 trillion in
I
revenue
think
is outlandish because it's just simply like never been close to
Yeah, I
being
know,
done
right?
like
So-
ever. But like
I'm not saying it can't happen. I'm just
I did-
saying
It's outlandish.
Also,
But I
It's
think it's
I
possible.
kind of think that a lot of the run up in the valuation right now is because I mean, and you're seeing it in other weird companies too. You look at something like Virgin Galactic has gone up a lot, like kind of a weird like risk on tech company.
would that be SpaceX?
Uh,
Or wait, space.
Virgin,
I'm sorry,
Virgin
space.
Galactic, space. Yeah,
yes.
Virgin Galactic, Richard Branson's space tourism company.
I think I've heard of them
Which is pre-revenue.
once or twice.
But
Every day before 8:30 in the morning.
But yeah, I'm not a I don't have a position in space. I think a lot, like people have been excited about Tesla for a long time, but there have been a lot of negative headlines about it. So I think that you've got the SEC investigation, the blatant stock manipulation,
falling
got
back on production
you
numbers
got the bad-
constantly.
yeah, like
That, yeah,
Well,
issues with quality, issues with autopilot, all the different things that everyone knows about. I'm not going to rehearse for and bore everyone, but it's like I think there was a lot of people wanted in, but there were all these lingering clouds. I think some of those have dissipated and have allowed really like the true like crazy enthusiasm of the retail investor base to come through. I think anyone who's like says they know why the stock has doubled so quickly, like
No, I mean, I think I know what the stock has doubled. It's FOMO. It's pure fear of missing out on this big run. I saw the same thing in crypto end of 2017, beginning of 2018. You just have people that are seeing it go up, and they don't know why. Nobody can explain it, but they know they want in. So they just buy and buy and buy, and they buy it up.
like tulips.
Like tulips.
Like tulips. It's
Similar,
exactly,
but
in a very
you
short...
can't increase the production of electric cars as quickly as you can increase the production of tulips.
I don't think so. But I don't know. I've never grown tulips, so I really can't tell you for certain. But yeah, there's one of the things, right, before is another worry that I have on Tesla is these promises they make that are a little bit outlandish, but they're promises like 1 million by the end of this year, 1 million autonomous.
I think it was 2021.
taxis.
Yeah,
2021.
Yeah.
Well, even that.
Well, you
is-
realize they already have the taxis on the road.
Well, but 1 million of them.
Yeah, they've already sold a
I mean,
million cars.
they-
It's just a
Well,
software upgrade
How
to their
many
own
did
car.
they sell? How many cars did they sell
They had 400,000 deliveries this year.
this year? Not this quarter, but this year.
115,
In
So
115.
they're going to
2019.
double production,
Yeah, and they're planning to deliver 500,000 cars next year.
and all those are going to be autonomous.
Yeah, that's just a
taxis.
software upgrade. They have the FSD full service driver.
it's not that
I don't
simple.
know.
Of course, they have regulatory approval to get through, but
no, but it's not the case that all of the Model 3s even have the hardware necessary for full self-driving. Like there are different people who have like tried to upgrade who can't and things like that. Like it's not simply a software issue. There's very complicated large computers that are required. I mean that are already in Teslas to some degree, but I don't think they can just over the air like retrofit every Tesla that's ever been made with like autonomous taxi capabilities.
And I don't know any software company that does that correctly. Okay, we're going to update 1 million cars on the road. Nothing's going to go wrong.
Oh,
Right?
again,
I mean,
I don't
that's-
think Tesla's making the choice. I think you have to pay. It's another. You pay $2,000.
But any kind of upgrade.
It's not going to be $1 million at a time.
You know, if we take Microsoft as an example, right? Every time they come out with new Windows, it's a perfect product, right? It's full of holes and bugs and fixes, and it takes like 12 to 18 months just to sort it out.
Let's talk about,
which is not a bad thing. I mean, that's how you do business.
let's talk
Of
about.
course, putting
stakes are
software
higher, yeah.
in the stakes are much higher. Yeah.
I want to hear Andrew talk about like a bullish theme. What's going on with the Gigafactory 3 in Shanghai or Gigafactory 2?
No, they're building the Model 3s in Shanghai.
Yeah, but
the first deliveries.
yeah,
this year.
well, so whatever number the factory is in Shanghai, like the
sorry.
Gigafactory 2 or whatever.
Yeah, gotcha.
What's the potential for that market? Like, how important is China to Tesla's future?
I think China's immensely important. As important, probably more important.
Oh, there's
than-
no way to
than
get $1
the
trillion
North America.
without China.
No, there's no way without China. No, I think Tesla's. I think China is of vital importance to Tesla. One, the production capacity is expected to be, I think, 150,000 by the end of 2020. They'll likely meet that capacity and demand. They sold, I want to say like 30 or 40. They delivered 30 or 40,000 in China. This is the first year they started delivering in China. 2019 was, excuse me.
But in 2019, those were mostly built in California and
Correct.
shipping them. Okay.
Correct. So, you beyond the tariffs currently that are on imported cars from the U.S., once they're built in China, you not only can negate that cost, but everybody knows that everything's cheaper to build in China. That we don't have to get into that. And you have like the Chinese market's the biggest car market. It's the biggest electric
vehicle
car
Oh,
market
definitely.
by far. Yeah.
It's and it's also there's a massive population. Like think about the 1% in China. We talk about the 1% in the U.S. being so much. I mean, it's 5 times as big in China. So there's plenty of people that can afford them. Tesla has that kind of almost like Nike status as a brand over
definitely.
there. So I think people demand it. I think, and then on top of that, once they get into the autonomous and the robo taxis and everything else, there's a big market for there as well. I mean,
So
China's a massive market.
So I do understand that China is like the largest market for electric vehicles in the world right now. Can you help us understand sort of where Tesla fits into the competitive landscape in terms of EVs in China? Like, I would imagine that the current dominant models are not as nice and much cheaper.
Mm-hmm.
So this is going after like the people who would normally be buying like Mercedes Benzes and stuff like
Yeah,
that.
I think there's a little bit of both. I think that they can make Model 3s there cheap enough that, yeah, they won't be able to compete with the Tatas or all of the really cheap, just plastic models that are driven around there. But I think they fit there as China's income grows, as people become more wealthy in China. Tesla will be a status symbol for a lot of people in China.
So that brings up the question, isn't that an issue that Apple's always had with Asia, especially in China, is that they don't own the market share at all in China. It's Android, which are cheaper devices that work just as well as the status of an iPhone, and that's always been a little bit of a stumbling block for Apple is having consumers in Asia that can meet that price point.
Yeah, well, Apple has a problem there because they've not been willing to accept the demands of the Chinese government for them to get in that market there. The Huawei, OnePlus, there's a dozen companies over there that dominate the phone market that aren't American made, they're Chinese made.
And it's kind of the same in Latin America, though, right? If you look at international Android phones, or
Oh yeah,
have
they
a
have
much
a much
better
more higher
market share,
Yeah.
mainly because of the price, right?
Yeah, I'd say for
Okay.
the price. Yeah. And for the fact that the things that we like about Apple phones, they're not really necessary in other countries. A lot of other people they just use WhatsApp. You can use WhatsApp on any
But do you think
device.
Tesla might have that same stumbling block or roadblock? Let's say that they can bust through it, but they're going to have that same issue with price points in Asia and having that premium built into their price, that Nike or Apple status.
Well, I think the risk.
I mean, it's going to be a challenge.
Yeah, I think the risk is there, and we can go back and forth on companies that have jumped over the.
I'm not saying they can't.
No, I know. I'm just saying, we could go back and forth on who has been able to jump over the block and who hasn't been able to get over it. But I think Tesla, because of the brand they've established, and on personally Elon Musk's likeness in Asia, people love him in Asia. So I think just the fact that it's a company that's becoming richer every day. They're having more disposable income. It's almost it's a very status heavy culture as well.
There's no question about all of those things.
I think they'll be able to jump over that.
And
block.
I think his,
and especially they'll be able to sell them at a cheaper price than they do anywhere else in the world. The ones that are built there in the Shanghai factory, the Model 3s there are going to be cheaper than anywhere else. So.
I think his brand also translates internationally pretty well. Like the themes about electrification, electrification, space exploration are things that kind of are like global concerns that I think when in developing countries people can start to afford to care about those things, they do. Mm-hmm. I'll be interested to see how they build out like the network of charging infrastructure, the way that they distribute cars and the logistics behind that. I know they've had some, just kind of issues with deliveries and things like that in the U.S. and obviously China's a whole other world. I don't really know. I suspect they'll sell mostly to the coastal cities, on the East Coast.
Yeah, definitely.
But yeah, I mean, it's obviously like honestly, China is one of the reasons why I can see people kind of saying the stock has a really big upside that's kind of hard to measure.
Well, do you mean the thing about China is that they don't have to? Tesla itself doesn't have to build out a charging network like it does in the U.S. The Chinese government has already built out a massive network there. I think in Shanghai alone last year they put in more in the city of Shanghai more charging stations in that city than in the entire U.S. did in the last 2 or 3 years. So I mean, they're exponentially growing their network. They're trying to get ahead of this electrification, curve. I think that's one of China's themes moving forward is that this is how they're gonna try to take over the number one spot of the world is electric cars and AI and everything forward, military power. But I think it's part of their plan.
And that's a risk
Tesla
too.
fits in well there.
It's a risk too. It's an opportunity and a risk, right? Because of the same reason, it's a kind of a risk for Apple or any other technology vendor because of the state politics.
You don't want to get
ripped
caught
off
up and looked at as like a tool of the American government, and
get crowded out by cheaper or get copied, and then get pushed off, get copied by a state-sponsored institution, and then get pushed off on that. So I mean, that's just risks. And every company faces it, which is fine.
Right.
But it's another reason why the $1 trillion is going to be very hard.
Yeah,
I keep on going back to $1 trillion, but there's no reason.
Yeah, it's a crazy number, but
it is.
All right. Well, how about this? I got a question for you guys. What do you think? What company should Tesla strive to be? We talked earlier about how it's hard to comp them to anyone, that there's no real direct, pure play, sustainable energy company. But this seems to be close to as we're going to get to one right now. Who should Tesla strive to be? Should they strive to be something like Apple that has a lot of hardware but also sells a lot on software? Or should they try to be Honda, who's known for incredible engineering power? Who should they strive to be?
I think they're striving to be both.
Yeah, I like your analogy to Apple earlier in this show, because that makes so much sense, is that you build very well-designed hardware products that can be a platform for services and software, and it's sort of an integrated, pleasurable user experience that's like second to none, and you charge way more than everyone else, but it's viewed as like a must-have kind of item. Like if they can get to that, then the company should be very valuable. Again, whether they'll get to Apple's net earnings, who knows? But they're still in the business of making cars, and China is a country with much better public transportation than for example the U.S. East Coast.
So let's talk about electric trucks, because they came out with news on their earnings
semis,
about
you mean?
the semis,
Okay.
right? Not the cyber trucks, but the semis. That they said they're going to start production and deliver
Yep.
deliver
Limited volumes.
these limited volumes
Second
in-
half this year.
of this year. Where are they going to make those?
I think they're made in Fremont, isn't it? Yeah, wherever
Okay.
their California factory is.
Have they made
Fremont.
any yet?
Yeah, there's been prototypes running all over the roads.
Prototypes,
They've seen them,
but not full scale.
I don't think they've done. I don't
Okay.
think they've begun full scale production yet.
It would be a good indicator of
They've
their,
actually-
their technology or their manufacturing capabilities.
Some of them have actually
able to-
been spotted in testing, like
Yeah.
delivering other Tesla cars to dealerships,
That's-
like
that's-
pulling trailers
okay.
and stuff.
But
I
getting
d-
up to
but I mean-
full scale production is something that they've always struggled with. So we'll see if they still struggle with both
But I will.
the semi trucks and the cyber trucks, if they actually are going to produce those.
I will
don't
make the
know.
argument that most of their bottlenecks in prior years have come from battery production, and that was all before the Gigafactory in Arizona or wherever the hell it is.
Nevada,
was built.
right?
Nevada was built.
Reno, yeah. I saw them building that one time whenever I was out
Really?
in Reno working. Yeah, yeah. It was huge.
The thing that
Huge.
I think will be, I think the thing that I think will keep the semi from being like a major contributor to the company's bottom line is basically just that like commercial, like trucking companies, for example, really care about asset utilization. They really care about downtime for maintenance. And they're not going to have people who know how to fix these trucks. On the one hand, electric vehicles and electric drivetrains should be much more reliable than internal combustion cars. But we do know about, just putting 100,000 miles a year on a truck, on a brand new truck.
Yeah, you
for a
don't
company
know
that's
what
never-
the wear and tear
like
is going to be.
things
like.
are going to break. They're just now learning how to build these trucks. No one knows how to fix them, and Tesla itself isn't great at quickly turning around those cars and getting them back on the road. So
I think that's one of the problems too, is that the semi trucks might be a distraction, kind of like space is a distraction. Boring a tunnel through LA and what other businesses that Elon Musk is doing right now are distractions. So basically, the semi market is never going to be the anything that really moves the needle for Tesla at the moment, right?
yeah.
So you're devoting a lot of resources to chase a market that do you really need to chase? Should you really perfect the electric
Are
car?
they really
autonomous
putting
car?
that much resources to it though? They're only spending 5% on R&D.
Yeah, but that's still a lot. That's still just a lot of people doing something that doesn't really need to be done. You kind of need laser focus.
Well, I mean, do you argue that the market for semis in the next 15 to 20 years is going to change to a big degree? It's going to go away
think
from
it will,
industrial.
but at some point you can't do everything. You got to the riches are where the niches, or the niches are the riches. And if you try to do everything, I think that is very tough to do. It's just very tough to do. Getting into semis, getting to all kinds of
Right.
these businesses that distract your attention because you only have so much time.
Yeah, but he's somehow got more time than most other people. Like that dude works like 150 hours a week.
He does, and
It's
there's no doubt that he does. But I think over time those distractions might catch up to the business, and it kind of did about a year or so ago. They're going in a tough space, or tough space, where he's fighting with the SEC.
Yeah.
Yeah, it was a
making-
stupid tweet. I mean, let's
but
not argue. But I don't think he really cares at this moment because he's
Well,
I mean,
know
he owns 18%
at this
of
moment
Tesla.
he doesn't, but now he's not chairman of the board. He's got
Yeah, but he's
lawsuits
not
from
going anywhere.
investors. I know he's not going anywhere, but there's just more distractions, and in the future, less power that he does have over his business, Tesla.
And the other thing that I'm waiting for to see kind of in the income statements is that especially with regard to the semi is still waiting for capital expenditures to exceed depreciation. It's been running under depreciation for I want to say 4 quarters now.
I think this
which
quarter
essentially-
maybe they did.
I don't.
Finally,
I don't think so. I don't think
Okay.
so.
I don't think that's going to happen anytime soon, especially now. I don't know if you know they changed their lease agreements for anybody that's leasing a Model 3 from them. You no longer get to keep it at the end of your lease, or you have the option to buy it. Tesla gets it back. So I think they're going to have Tesla's going to own more and more cars. I don't know if they're going to be depreciating those cars over time. I don't know when that may happen, but it might not happen anytime soon. CapEx exceeding depreciation.
What are they going to do with the cars?
They're going to dedicate them to robo-taxis. What do you mean?
Okay.
Okay.
Probably not. I mean, it's going to take time. It'll be next year, the year after, but
Yeah. So the robo taxis are supposed to come out by the end of 2021.
yeah. He's expecting quite a few by the end of 2021. But he said in a presentation or something not too long ago that there will be some running in some jurisdictions by the end of this year, because there are some places in Arizona and even Pittsburgh. There's been some cities that
With
have
no human drivers?
yeah, no human drivers.
But they tend. Musk does this.
Yeah, he
and
overpromises.
He overpromises and underdelivers quite often.
Yeah, but
so
he
we'll see.
overpromises to such a degree that people are okay with the results. Typically.
True, but it does
Yeah.
affect the stock price in the short term, which
It's been a volatile stock. There's been a lot of drama. There were a couple of times when they were very, very short on cash. A couple of times when the stock was low enough that he was about to get margin called. But it's crazy that they keep that's why it's been such a fun story. That's why I think
maybe the overpromises.
inspired so much energy from both his supporters and detractors, is just that they keep managing to throw these Hail Marys and thread the needle quarter after quarter. And obviously now the market thinks that a lot of storm clouds have cleared and that they're turning things around. We'll see. It's obviously it's been very fascinating. And I do want to say that, like, for all of my criticisms of the company and the way it's run and its valuation, like, I'm not someone who would ever want it to go bankrupt. Like, I think if you're cheering for the bankruptcy of, like, and I'm not talking about you, Kevin, or any, but there's obviously an active community of people on Twitter, like the Tesla Q people, who like think it should be bankrupt, want it to be bankrupt.
And
Like,
Bloomberg Business Week, I think it was 2 weeks ago, had an excellent article on those guys that Tesla.
yeah, Dana
Q.
Hull wrote that. I follow her on Twitter. Yeah, she's great.
It's called Buy Haters on Bloomberg. If
Oh,
you're
yeah,
interested
that.
if you're interested in Tesla and what the short sellers are saying and what they're doing and the Twitter wars and how Elon Musk is singling out people in this group, like, another distraction.
It's been intense, but I think, like, if you really want, like, one of the only recently founded American car companies to go bankrupt, like, there's something wrong with you. Like, you
there's
should-
something. I'm a bear on the stock. I think they have a lot of challenges to execute and be successful, but I would still like to buy a Tesla 3 or a new Tesla, whatever they come out, except the Cybertruck. No Cybertruck. But anything else, I'd be a huge fan to drive. I've never even ridden one. I hear it's
I've ridden in one that was being driven somewhat erratically through the streets of Chicago. Great acceleration.
Great
Yeah.
acceleration.
I'll leave it at that. I was being pushed into my seat several times. It was a thrilling ride.
Nice. So I hope they do well. I think that they have a great product. I think they can hit on all of these, but it's going to be very, very difficult to execute on everything he's trying to do. And there's probably much more stumbling blocks ahead for them before they actually reach that vision. So I'll leave it at that and turn it over to you.
Yeah, I'm very long on Tesla. I probably will buy a Tesla if my Toyota Camry will last me a couple more years, so I can save up some money. But yeah, I think, and this is, everything we've said, and they haven't even started producing the Model Ys yet. That's likely going to be their best-selling car. That's the best-selling car in America, is a crossover SUV. They're growing popularity in China, so I think there's very bright days. There's probably a couple dark days ahead of him. I'm sure Elon Musk will do something stupid and tweet while he's drunk, but I think there's bright days ahead. I think it's by far going to be the most valuable car company for a long time.
Very good. Well, that's the end of the segment for Tesla. Thanks again to Carrier Direct for providing a lot of this great research that we just have at our fingertips every morning, that we can come in here and discuss different stocks and different financial plays in the market. And JP, thanks for being here. You can stay if you want to, or you can get back out and do some work. It's really up to you.
Got some stuff I'm going to finish up, but thanks for having me,
Yeah,
guys.
get to work.
Very good.
Appreciate it.
Yeah. Get that passport research out there.
Yes.
Yes. And you can find all of JP's research at freightwaves.com/passport. And that's all the information that you need to sign up for that product, which includes his research, our research, plus event tickets, all in one package that gets you through 12 months.
That's right.
Yeah. So what's the next thing on our agenda, Andrew?
Next thing is actually one of those research projects, our 2020 freight forecast. We were just going to talk a little bit about what we're expecting. We'll go ahead and give a shout out now. You can go ahead and download. That's one of our free research reports. You can download it on FreightWaves.com.
Yeah, just Google 2020 FreightWaves 2020 FreightWaves Freight Outlook, and it'll take you directly to the download page. You can download that free report. It's a special report that our paid research divisions have put out online. Plus, we shot a live show within the booth. Dooner, myself, JP was on there. Botanist was on there talking about intermodal. We also, Craig Fuller, our CEO, came on with JT Engstrom, our chief strategy officer, and we all came in and discussed what we're seeing in the markets and what we're expecting for the next 12 months.
That's right, and you can watch that FreightWaves TV. So it's at tv.freightwaves.com. You can check that live stream out. Yeah, I mean, do we want to jump into some of the numbers, or you want to move on to the DHL supply chain?
Well, let's move on to the DHL supply chain, and then we'll extrapolate
Talk
that out
Cool.
for 2020, because that's the DHL supply chain pricing power index is a real time market condition. So what are we seeing right now?
So the pricing power fell a little bit this week, fell 5 points towards the shippers. Just a quick refresher, 0 would be all the power to the shippers, 100 all the power to the carriers, 50-50 is an even market both ways. So it's fallen down from, it was at 45 a month ago or so. It's fallen down to 30 now. And our reasons for that, I guess we saw volumes were pretty much identical to last year, except for the reefer volumes. They're up pretty sharply.
Reefer's volumes are up, and we had some pretty bleak earnings all through the week, the last couple of weeks.
Logistics, everybody's.
It's not company specific; it's just the market. Everyone's down. Revenues are down 15%, 10%, 5%. Mostly double digits though in both like dry van, flatbed. And also brokerage, too, has taken an enormous hit on both gross revenues and net revenues, and that margin has shrank because we're in that part of the cycle where contract rates are still coming down, spot rates are flat, and when they start moving up, it's going to get probably another quarter of really bleak earnings, especially on the logistics side, as that gross margin narrows. Until we rebalance and hit the next phase of the freight brokerage cycle.
Right, and that's when spot rates kind of push up contract rates during those renegotiations,
Exactly.
And so you have that spread is a bit wider for those logistics and brokers to make some money.
You do, but even in that, right before that happens, your margins will narrow a little bit, but the gross or the average revenue per load will start to increase. So even though you're running on a smaller margin, the gross sales are higher, right? So that gross margin dollar amount grows, and then your percentages grow, and then the market tanks again because it's just a cycle, a big cycle of peaks and valleys.
It's got to be one of the most cyclical industries I've ever seen.
It really is, and it's such short cycles,
Right.
and basically you're coming around to the oil and gas industry doing that, especially the shell players out in Texas and Oklahoma, where I'm from, is that it was a huge bubble out there. They had all these great forecasts of the oil they're going to produce in year 4, 5, 6, 7, 8, and they were just drilling all they could drill, and they drilled themselves out of business. And no help from OPEC, really, who was trying to drive them out of business too. So you had all these confluences, and then you get down to the actual 4 or 5 years, and they're not producing as much oil as they thought they would, and more gas. And there's places out in Texas and I think Oklahoma too, where your wellhead, you go to the nearest terminal, you ship it to the nearest terminal through pipeline or even truck, and that gets passed along that initial place where E&P company actually sells our oil, is basically, and their natural gas as well. Natural gas is negative. You're paying people to take your natural gas away, which is not
Flooded
a good.
with it.
Yeah, no, flooded
Yeah.
with it. So it's not a good market to be in. But yeah, that's kind of, and what we're seeing for the rest of the year is kind of that next phase in the cycle.
Yeah, we're I guess we are expecting a little bit of a relief coming up. Second half of 2020. We're expecting capacity to shrink a little bit. Some people to leave the market. Some of those drivers to get out. We're not seeing new orders, and used truck prices are both giving us some indication that capacity should tighten.
We're seeing elevated operating ratios for trucking companies
Yes.
at 100, sometimes above 100. Increase in insurance costs. We did the nuclear verdicts paper. Our survey said that on average, trucking companies are seeing a 20% increase year over year on premiums, which whenever you're running 100 OR is not 98 OR, 99 OR. It's not a good sign. So
No. But should have brighter days ahead. The economy is still strong. China seems to be the trade talks with China seems to be improving. The USMCA should help out
Yeah.
as well. More trade, and especially if Brexit ends up happening, there's a good tie there between Boris Johnson and President Trump, so there could be another deal there. So yeah, the economy's strong, consumers good. Second half should be much better.
it should be, and that's kind of our forecast,
Right.
is that
Yeah,
the capacity is
and
going to
this is-
tighten a little bit. We're going to be more balanced market. We're certainly probably not going to see 2018 unless there are critical events that were hit, and that's
Yeah.
really what will drive.
And that would
for
honestly
that.
be, those critical events sadly are usually natural events. Hurricanes.
There
hurricane
is one
season.
that's not that
What's that?
I forgot to mention, and that's the drug clearinghouse
Ah,
database.
yes, yeah.
That's going to make every driver who fails a test, that's going to be public information. All employers can go in and they have to search that before they hire anyone. And basically, I think it was in 2018, the failure rate hit at 1%. So that means that in 2020, instead of a 25% random sampling, it's going to be 50%. So that database that started on January 6th with 0 names in it, that is going to accelerate the building of that, and it's going to take a lot of drivers that in the past have been qualified and move them into the unqualified hiring bucket, and that's going to limit the supply of drivers out there, which should help push rates up for carriers and brokers.
So I've read at least a couple kind of wide-ranging expectations for that and what the actual capacity change could be. I think some people said by the end of this year, 2 or 3% of drivers could be in there, but by the end of next year, when it continues to populate, this is something that's going to grow as they drug test more. That it could be upwards of 5, 6, 7, 8%. So it could have a massive impact on the market.
It definitely could, and I've been seeing that the initial numbers kind of put it on that pace. If you can take the first 2 or 3 weeks results and
Right.
forecast that out. So here in the next few months, we'll probably do a research project where we take the numbers and we do some kind of mathematical model with our guys over in data science on the Sonar side and
Put an expectation out.
put an
What's gonna
expectation
happen
out.
to rates,
yeah.
capacity,
I think we
everything.
just came up with an idea
That
for
sounds
a
pretty
research.
fun, actually.
I know
Yeah, I
it
like
does,
that.
doesn't it?
Should definitely do
Yeah,
that.
maybe right after the first quarter,
Yeah.
right? So
Sounds
basically we see the March 30th numbers.
Yeah.
Last day of the quarter, and we go from there. Or is it March 31st? I can never
it'll be the
remember.
31st, yeah.
31st. So
31
March
days.
31st. And we can just forecast that on out.
Call it done.
Call it done. Call it done.
So let's move on. What you got a new show that has been created
Yeah.
out of thin air. About
Out of-
5 minutes. You guys come up with something.
You go to the Caribbean, and we create a new
I come
show.
back and there's a new show.
And you're like, what is this? I go, we did this in a day. We went from concept to title to a poster, logo to social media, where we pumped it out on LinkedIn in a day.
FreightWaves speed.
Half a day, really, because we didn't really start until about 11 o'clock.
Okay.
But
well,
it's
what is it? When is it? And why should I watch?
Sure. It's Dooner and I, and it's all about freight sales. So if you're a freight broker out there, if you are anyway connected with freight sales, like a forwarder, expediter, if you work for a trucking company and you're a sales guy, it's all about freight sales. And it goes from this first episode, which debuts tomorrow live on LinkedIn and YouTube and Twitter and available wherever podcasts are downloaded, iTunes, Spotify, and all the others. It is all about lead generation. Who owns lead generation? If you're a salesperson trying to do lead generation, how should you do it? What tools and resources out there for you? If you own a company and or you're a marketing person in a company, it's all about content marketing, what works, what doesn't. And basically, we're going to have our special guest, the head of Sonar Sales, here, Michael Caney, for a few minutes, talking about he used to be a freight broker, and he was president of a freight brokerage with Riverside Transportation. And he's going to tell us his philosophy about it all. And in future episodes, we're going to have outside guests, a lot of outside guests within the industry, outside of the industry, sales pros coming in. We don't have the answers, and that's the great thing about the show, I think. We don't have the answers, but we have the questions, and we'll work through the answers live on the show. Plus, we're going to do call-ins. So anyone who wants to call in at any point, we jump off what we're talking about, and we pick up the call, answer the question. It might drive the discussion. It's all going to be kind of ad lib going through, just a very skeleton structure of what we're talking about, and we'll just talk.
Dooner used to be a freight broker, didn't he?
Yeah, he was a freight broker. He did more of the ocean side and expedited,
So,
LTL. Okay. But yeah, we'll swap war stories. I used to be a freight brokerage. We've both knocked on a lot of doors. We've both cold called a lot of people, cold emailed a lot of people, and it's just kind of both of our questions about how could we have done it better. What's the best structure? So we're going to bring in experts to give us their insights and their tips and tricks, and so it's going to be a great learning process for anyone connected with freight sales, freight marketing, ownership, entrepreneurship out there.
Sounds good.
So that's a recap of the Wednesdays.
Is it going to be a weekly?
It's a weekly live Wednesdays at 1 p.m. And then, it's available on FreightCast, iTunes, Spotify, YouTube, just where all other FreightCasts are available as well.
That sounds exciting.
Yeah.
It's got to be, what is that Dooner's 5th or 6th podcast?
I know. He's just
piling it on.
He is. He's a madman.
All right. We got long short.
We have long short.
About ready?
So I am ready.
All right.
Let's close it off here with long short.
We're talking about the FANG stocks a little bit. The tech stocks seems like every year they keep saying this is the year that they pop and the S&P beats them, and this is the year that tech companies are done, and then somehow they keep turning along and they keep outperforming everything. This year, the FANG stocks outperform the S&P?
So they've had a great run in the second. I know in the second half of 2019. I don't know if you have numbers for that. But they've had a fantastic run. I think such a fantastic run that I will go short and say that they do not outperform the market, the S&P for 2020. And I think a lot of that, Google had disappointing numbers. Facebook didn't. But, Netflix, in this for Netflix, right?
Yes, it is.
And Netflix is going to have a challenging time.
Yes,
Apple... Apple's had a great run, so is that run over, or are they going to moderate? I'm not going to say that they're going to tank, but I don't think it's that the growth is going to be there.
Yeah, a couple of years ago, it was like all 5 of the FANGs were top notch. They were all still innovating, still doing new things. I think that a couple of them have fallen off that pace. I don't think Facebook is really innovating in a way that they had been in years previous. Libra seems to be a massive commercial disaster.
Oh yeah,
for them. I don't know what they were thinking there. And then you have Apple and Alphabet. Alphabet, their earnings hasn't been great. They're trying to get more into the home things. They're trying to innovate and get into the Google Homes and the security systems with Nest and everything else.
It's funny. We say, Google's had disappointing results,
yeah,
but I think most companies would kill for that growth.
Yeah, and then that's just the expectation that we've come with a company like that. That you were expecting 25% growth every year.
Yeah, which is kind of why I'm going to go short, because it's all based on growth expectations, not the company themselves. It's that I think those growth they're not going to meet their growth expectations in 2020.
Yeah, I think I'd agree with you. Actually, I think Apple may single-handedly keep them up there, but I do think that Facebook and Netflix especially probably have down years for the FANG stocks, which means
everyone's
they grow
coming
10,
after
15%.
Netflix.
Yeah, I mean everybody they're coming at their throats. I mean they have I think Disney reports today, so we'll see the first results from Disney Plus, which should be fun. Might get some pin action on Netflix coming down on that.
I think you will see some pin action on
that. Okay. Well, so we're both short. We think the S&P outgrows the FANG this year. The next one is a topical thing. Barstool Sports, the media conglomerate, just got bought out. I think it was last week or the week before by a casino company, Penn National, I think is the name of it.
Penn National.
At a massive valuation, $450 million. I think it was $136 million for 33% of the company, and then they're going to buy up to 50% a controlling stake in a couple years. Are you long or short Barstool Sports moving forward?
Great for those guys. It was great. I mean, to come up with a media company, and they've been around a little while. Because I really didn't realize they were. I just heard of them maybe 2 or 3 years ago. I didn't realize they've been around for the overnight success. You don't hear about it. You only hear about it until they hit it,
right.
And now they really hit it. But I think there is a room to really carve out a new sports medium. I think ESPN, Fox Sports, though they're becoming old, aging actors in Disney with ESPN, right? In these conglomerates, and they can't really control their own destiny. That they have to get their marching orders from corporates, and I think that really limits companies. So I think there's real opportunity for kind of the next generation of really great sports programming to come out.
So you're long.
I'm long, yeah.
I got to first respond to you. I agree with you completely. I think that there is a new market there's a big market for a new sports, media conglomerate. I think ESPN is sadly old news. I love ESPN, but it's especially Fox and any of the other ones. It's just ESPN for me. I think that they own that market better than anyone. So yes, I do think there's space. And then the second thing, I would think that Barstool Sports could fill it, but then I have a couple things. I think that I think they'll piss people off with some of their other content. They have a lot of just kind of questionable, on the edge stuff. But in our world today, everything moves so fast. You put out another headline, we have people, that can just keep creating news about themselves, and then everybody forgets about what they said last week. That seems to be the thing going on in this country. So I think they'll be fine. I think they can say whatever they want, and they just about get away with it.
I think so too, and I haven't read too much about it, and I wish I had. Is because whoever acquired Penn National, are they going to use this to drive sportsbook betting?
Yes, that's where Barstool's. That's the reason Barstool's valuation's probably doubled in the last year because they've gotten into sports. This subscription sports betting where you get picks and whatnot.
I'm incredibly long then, because if there's one thing that's never going to die, recession-proof.
Yeah.
Sports gambling.
Gambling in general.
Gambling in general is never going away.
Yep.
I mean, it's not going to be electrified. There's not going to be new energy sources. There's not going to be anything. People are always going to bet, and if you can drive that through your casinos or online business, because I think Tennessee now
legal
online gambling.
Soon. They've already passed it. I don't know if it's legal yet, but soon.
I don't know either.
Yeah.
But yeah, I mean that's something that will never go away.
Yeah, I agree with you on that. I want to like Barstool. I just don't like the people that I don't like the dudes that run it. But it's okay. They're going to be successful.
I don't really watch it,
I don't know whether it seems like a little bit of an odd match, like between a casino company and this media company. I don't know if Barstool knows enough about online gambling to really to help out Penn, and I definitely don't think Penn knows anything about media. But maybe together they can put their heads together and be successful. Yeah. I hope they are. I think they've done an awesome thing. Like they've done it their way, and I appreciate that they've never sacrificed their own creativity and their own mantra for anyone else. So I appreciate that. So yeah, definitely. I wish them all the best.
Very good. Very good. Well, that wraps it up for Kevin Hill and Andrew Cox here at the Freight Intel Group at FreightWaves, downtown Chattanooga. And thanks for everyone for watching, and especially, again, Carrier Direct for providing us with all this great research. Special thanks goes out to Peter and Ryan. I hit the button.
A little fast
Peter,
there.
Peter, Ryan, and Diane. So Carrier Direct, thanks, and we'll see you all next week.